Okay, dear financial management students, I'm Abil Ahmed from Abil School of Accountancy, financial management expert. In today's class, students will be discussing a very important concept regarding irredeemable bonds. Uh, the question is, sir, what is the main thing in irredeemable bonds? Basically, we are not going to learn only one thing, which is how to calculate KD1 minus T, cost of debt after tax in case of irredeemable bond. The main point which we'll be learning in today's, I would say, a concept building video, we'll be learning if there's a change in the tax rate. So what will be the impact on that KD1 minus T? And let me tell you one thing. We'll be doing that numerically, but I'll then explain you if the same thing comes theoretically, how to respond to that. That according to me, if the same question comes theoretically, then it is going to be a really good test of students' concepts. So let's go to the question and begin the question. Okay, it's here. So students, let us just read the question. ABC company is having 10% irredeemable bond, par value is 100. Market value is 115, but categorically they have written come interest. First of all, if nothing is mentioned and the current bond price is given, we always assume it is X interest. X interest means excluding the impact of interest, but whenever it is come interest, it will be mentioned. Okay. So whenever it is, either it will be mentioned that the given market price is come interest, or there's a possibility that indirectly examiner writes the come interest, I would say, value. The question is, how does he can write indirectly? Let me give you the example. If you are solving the question and the current bond price is given, and after that examiner says company is about to pay the interest. The moment examiner is going to write the company is about to pay the interest, this is again an indicator that the given market price is come interest. Because whenever company is about to pay the interest, the impact of that coming interest will be automatically included in the current bond price. So logically, there are two ways to simply inform the students that given price is a come interest. One, categorically examiner writes, 99% it happens. But there are 1% chances the current bond price is written. After that, they did not write come interest, but after that examiner has written that either the before that or after that examiner has written company is about to pay the interest. In that, I would say scenario also, in that situation also, the given price is treated as a come interest. When we calculate KD1 minus T in case of irredeemable bond, we actually need X interest bond price. The question is not here to calculate KD1 minus T. The question is very interesting. They are saying when tax rate declines from 30% to 20%, calculate its effect on KD1 minus T. What will be the impact on KD1 minus T? Let me tell you one thing. I'll prove that mathematically as well, but let me tell you one thing. The impact is, the relationship is reverse. If the tax rate declines, the KD1 minus T will increase. There's an inverse relationship. If the tax rate decreases, okay, the KD1 minus T will increase. There is an inverse relationship. The question is why there is an inverse relationship. That is a good question. Let me explain that. Actually, when the tax rate declines, it means due to decline in the tax rate, now the company's tax saving from interest payment will fall. When the tax payment from interest tax savings from interest payment will fall for the company, then logically the cost of debt becomes little bit expensive for the organization. Assuming earlier the tax rate was 40%, it means whatever interest company was paying on that interest, which is a deductible expense, company was saving 40% tax. If the tax rate reduces, then companies' tax saving from interest payments, they will also reduce. So logically, the cost of debt becomes expensive for you. So always remember one thing, students, the relationship is reverse. If there's a decline in the tax rate, then the cost of debt becomes expensive for the organization. In fact, if there's a rise in the tax rate, I would say taking more loan creates an attraction for the organization. The question is, if there's a rise in the tax rate, why taking more loan creates an attraction for the organization? Because Higher tax rate means when I'll be taking a loan, I'll be paying interest, I'll be saving more tax. Okay, now let's dive into this question. First of all, student, let us first simply calculate KD1 minus T when the tax rate is 30%. But you should have noticed within just a span of 2 to 3 minutes, I've given you lots and lots of concepts. KD1 minus T, in case of irredeemable bond, we calculate I, 1 minus T upon P naught into 100. I is the cash interest. And how do we calculate cash interest? Simply the coupon rate multiplied by the par value. 10% of 100 is obviously 10. Right now the tax rate is 30%. They have given us 115, but they categorically written it as cum interest. We have to make it X interest by deducting interest. So X interest bond price is 105 into 100. So simply the numerator, you will have 7 because 1 minus 0.3 is 0.7 into 10 is 7. 7 divided by 105 multiply by 100. Students, I'm getting 6.6, okay, 7%. So when the tax rate is 30%, your cost of debt is 6.67%, means this loan is costing you 6.67%. Now, if the tax rate reduces, okay, everything is same, but the tax rate from 20, it becomes, or from 30, it becomes 20. 10, 1 minus 0.2, 105. Logically, the KD1 minus T will increase. Why it will increase? Decline in the tax rate means I'll be having less tax saving from interest payments. 8 will come in the numerator divided by 105 into 100. I'm getting, students, almost 7.6 with a little bit rounding of 62%. So you can see that here's the proof. Decline in the tax rate actually increases the KD1 minus T, but I've given you the logic as well. But again, this is not the answer. They have categorically asked what is the impact on KD1 minus T. The impact is 7.62 is going to be KD1 minus T. Previously, it was 6.67. So here comes the impact, which you have to see in your multiple choice questions. The multiple choices which examiner has, might give you. But here they have not given us anything. So actually, student, I'm getting 0.95%. The interpretation is KD1 minus T will increase by 0.95%. KD1 minus T will increase by 0.95%. So students, don't forget one thing. When the tax rate declines, then KD1 minus T increases. I've given you the logic behind that. So thank you very much for watching this concept building video. And student, don't forget one thing, that Alhamdulillah, Abil School of Accountancy is having the honor of producing world top in FM, world top in AFM, and we have produced number of position holders in each and every ACCA papers. And one more thing, student, let me tell you one thing. All these students, okay, whoever they are appearing in this current attempt or the coming attempt, every student is having same objective. We know that objective is short-term, quantifiable, which we want to achieve. Every student wants to achieve at least desirable 50 marks, at least. Okay. So everyone is having a short-term objective. The objective is whichever paper that the student is giving, that student should pass. Simple as that. Everyone should get 50 marks. Every student has the same objective. The point is, even though everyone is having a same objective, very clear-cut objective, everyone knows that what exactly they want to achieve. But why? Some of the students, at the end of the day, they become successful, and some of the students, they do not cross that benchmark 50. The problem, where the problem lies, student, the problem does not lie in the objective, because objective is common. Even though we have common objective, the results are different. The problem is in the process. What process, students, you have to exactly follow in order to pass the paper. So you have to focus on the process. The good thing at Abil School of Accountancy is the day you are going to enroll in our college in any ACCA papers, from a very first day, from the joining, I would say, moment, we will give you the tax planner, okay? And we just do not only give you the tax planner, then there will be a continuous monitoring on you. So we actually provide you the proper process. So what makes Abil School of Accountancy, I would say, passing rate so high, even though the objective every student is having same all over the world? Why we are having such a high passing rate? The reason is our process. The process is so good in our college that you just need to follow that process. At the end of the day, you will automatically achieve your objective in the short term, and obviously in the long run, you are going to achieve your goal as well. So what makes the difference? Process. And we have developed that process. If you follow that, I can guarantee you at the end of the day, you are going to pass your paper in first attempt with flying colors. So thank you very much, students, watching this lecture, a concept building video.